This is an emergency broadcast. I need you to stop what you are doing, put down your phone, and listen to me very carefully. The rules of the game just changed while you were having dinner. It is Sunday evening, January 26th, 2025. And while the mainstream media is busy discussing sports events and entertainment news, the fuse has been ignited on a financial bomb that is positioned right in the center of Washington, D.C. We are no longer examining a correction. We are no longer examining a dip. We are examining a countdown clock that is flashing red. We are exactly 6 days away from a total system paralysis. Ladies and gentlemen, Prime Capital here. This afternoon at 2:14 p.m. Eastern Standard Time, President Trump transmitted a message that has effectively frozen every risk manager on Wall Street. It was not a negotiation tactic. It was not a subtle hint. It was a declaration of war on the budget process. The message was short, brutal, and terrifyingly clear. Government shutdown in 6 days. The swamp is broke. No deal until America is first. Now, I know exactly what you are thinking. You are sitting there thinking, Prime Capital, come on. We have witnessed this scenario before. We witnessed it in 2018. We witnessed it in 2023. It is political theater. They scream, they shout, they shut down the national parks for a weekend, and then they print the money and everyone returns to work. It is just noise. If that is what you are thinking, you are making the most dangerous mistake of your financial life because this is not 2018. In 2018, inflation was 2%. The debt was 20 trillion. The world was at peace. This is 2025. Inflation is running hot. The debt is 38 trillion. The geopolitical order is collapsing. And most importantly, the consequence of this shutdown is fundamentally different from anything we have ever confronted. This is not just about locking the doors to government facilities. This is about blinding the pilot of the airplane in the middle of a hurricane. We are facing a data blackout. You have to comprehend how the modern financial system actually operates. It is not operated by humans sitting in a room making intuitive decisions. It is operated by algorithms. It is operated by massive supercomputers at BlackRock, at Vanguard, and at the Federal Reserve. These machines consume data like oxygen. They need the Consumer Price Index, CPI, to measure inflation. They need the non-farm payrolls to measure employment. They need the PCE deflator to measure consumer spending. These numbers are the radar that the pilots utilize to navigate the global economy. Every interest rate decision, every bond yield, every stock trade is calculated based on the expectation of this data. But here's the nightmare scenario. If the government shuts down on Friday night at midnight, the lights extinguish at the data agencies. The Bureau of Labor Statistics, BLS, the people who communicate if inflation is devastating us, closes its doors. The Bureau of Economic Analysis, BEA, the people who communicate if we are in a recession, sends its workers home. The website goes dark. The reports are canceled. There will be no inflation report next week. There will be no employment numbers. The radar screen goes completely black. Now imagine you are Jerome Powell. Imagine you are the chairman of the Federal Reserve. You are already losing command of the bond market. Yields are spiking, the banking institutions are wobbling, and suddenly you are informed that you have to navigate the airplane for the next 3 weeks with zero instruments. You do not know if inflation is ascending or descending. You do not know if unemployment is spiking. You are navigating blind in the fog. What do you execute? Do you remain stationary and do nothing? That is dangerous. Do you elevate interest rates and risk collapsing the economy when you cannot observe the dashboard? That is suicide. No. When a central bank navigates blind, they default to their most primal bureaucratic instinct, panic. And the only instrument they possess to soothe their panic, the only button on the dashboard that operates when their radar is deceased, is the printer. The market recognizes this. The hedge funds recognize this. The sovereign wealth funds in Dubai and Singapore recognize this. They recognize that a data blackout compels the Fed into a defensive posture. It compels them to flood the system with liquidity just in case. They cannot risk a deflationary liquidity freeze when they do not possess the data to track it. So they will print, they will inject reserves, they will launch a safety print to maintain the gears lubricated while the government is closed. They will select inflation over instability every single time. This is why you are observing gold contacting a new all-time peak tonight. This is why you are observing silver demolishing through $100 and refusing to retreat. The market is not awaiting the shutdown to actually transpire. The market is front-running the inevitable response. The institutional money is acquiring the anti-dollar now because they recognize that by next week, the dollar is going to be diluted by a panicked Federal Reserve attempting to navigate a political crisis. They are acquiring the insurance before the house ignites. They are disposing the currency that depends on politicians and acquiring the money that depends on physics. And the timing could not be worse. We are not entering this shutdown in a period of calm. We are entering it in a period of extreme fragility. The repo market, the infrastructure of the financial system, is already demonstrating signs of stress. The reverse repo facility is depleted, the cash cushion is eliminated. A shutdown now is like extracting the crutches from beneath a man with a fractured leg. It guarantees a collapse. And to make matters deteriorate, this political deadlock is not just about budgets and deficits. It has become personal. It has become violent. While Washington argues about numbers, something catastrophic has transpired in the streets of the Midwest. Something that has transformed this financial dispute into a social war. We need to discuss the spark. We need to discuss the explanation why the Democrats in the Senate are vowing to incinerate the funding bill to the ground rather than compromise. This is where the narrative stops being about numbers on a spreadsheet and starts being about fire in the streets. We have discussed the data blackout. We have discussed the Federal Reserve navigating blind. But you cannot comprehend why this government shutdown is inevitable. You cannot comprehend why the politicians are refusing to authorize the agreement until you examine what is transpiring on the ground in the American Midwest. While the algorithms are observing the bond yields, the rest of the nation is observing a tragedy unfold in real time. We need to discuss Minneapolis. For the previous 48 hours, reports have been flooding into our analysis desk regarding a massive escalation of force involving federal agents. We are not discussing local police. We are discussing federal assets, ICE, Border Patrol, and federal marshals being deployed to domestic operations. And late last night, the situation went from tense to catastrophic. We possess confirmed reports of a second incident involving these federal agents in less than 3 days. But this time the narrative is different. This time the victim was not a suspect. The victim was not armed. The victim has been identified as a 34-year-old ICU nurse, a woman who spent the previous few years preserving lives in a local hospital, a woman who was simply walking home from a 12-hour shift when she encountered a federal patrol. The details are still emerging, but the reaction is already explosive. Videos of the incident are circulating on social media, uncensored and viral. The public outrage is not just anger. It is a visceral collective scream. People are observing a healthcare hero, someone who represents the very best of the community, eliminated by the very government that is claiming to protect them. This has initiated a wave of protests that is propagating faster than the information itself. Minneapolis is burning. The streets are saturated with thousands of people. The National Guard is being mobilized. We are observing the early stages of a social supernova, and this is the spark that destroys the budget agreement. You have to comprehend the political calculus in Washington. Yesterday, there was a slim probability that the Democrats and Republicans might negotiate an agreement to maintain the government operational for another month. Today, that probability is zero. The Senate Democrats have already emerged and drawn a line in the sand. They are vowing to obstruct any funding bill that includes capital for these federal deployments. They are declaring, "We will not authorize a check that compensates for the bullets utilized to eliminate nurses." The political expense of compromise has become too elevated. If a Democrat votes for this bill now, their career is terminated. If a Republican votes to defund the agents, their base will revolt. It is a deadlock. It is a stalemate inscribed in blood. So, the shutdown is no longer a risk. It is a certainty. The government will close on Friday because the two sides are no longer arguing about capital. They are arguing about morality. They are arguing about justice. And when politics becomes emotional, logic evacuates the room. This guarantees the data blackout. It guarantees the Federal Reserve will be abandoned alone in the darkness. But examine what this executes to the psychology of the market. Markets despise uncertainty, but they fear chaos. When you combine a financial collapse, the liquidity freeze with social unrest, Minneapolis, you acquire the perfect storm for precious metals. Investors examine the screen and observe the banking institutions failing. They examine out the window and observe the cities burning. Where do they position their capital? Do they acquire stocks in corporations whose stores are being destroyed? No. Do they acquire bonds from a government that is eliminating its own citizens? No. They acquire the only thing that is neutral. They acquire the only thing that is private. They acquire gold. They acquire silver. This is why the premiums on physical metal are exploding right now. People are not acquiring silver to generate a profit. They are acquiring it to acquire safety. They are acquiring it because they realize that the system is breaking down on every level, financial, political, and social. The trust is eliminated. And when trust vanishes, capital velocity spikes. People evacuate from the currency and into the asset. This brings us to the most alarming signal on the technical charts. We are observing a collapse in the time to travel. The valuation of silver is not just ascending upward, it is accelerating. It is moving faster than it has ever moved before. We need to analyze the velocity signal. We need to demonstrate the mathematics that suggest $110 is just days away. If the social chaos in Minneapolis is the fire, then the price action we are observing on the charts is the explosion. I need you to stop examining the valuation level and start examining the velocity. Because in financial markets, velocity is everything. Velocity communicates the strength of the movement. Velocity communicates if it is a transaction or a panic. And right now, The velocity of silver is communicating that the barrier has completely burst. We are tracking a metric identified as time to travel. This measures how many days it requires for silver to move $10 in valuation, and the data is absolutely terrifying for the short sellers. The time intervals are collapsing. The train is accelerating. Let us examine the history of this rally. When silver moved from $20 to $30, it was a struggle. It was a conflict. It required 145 days. The banking institutions combated every increment. The algorithms shorted every rally. It was a grind. Then when we moved from $40 to $50, circumstances started to accelerate. That movement required 39 days. The resistance was weakening. The shorts were getting exhausted. But examine what just transpired. Examine the movement from $70 to $80. It required 6 days. And the movement from $90 to $100, which should have been the most difficult psychological barrier in history, it required just 10 days. Do you observe the pattern? 145 days, 39 days, 6 days, 10 days. This is an exponential decay in resistance. It signifies the sellers are eliminated. It signifies the algorithmic suppression. The computer programs designed to restrict the valuation has fractured. The machine that typically declares liquidate at resistance levels has been overwhelmed by a tsunami of physical acquiring. We are now in the vertical phase. This is the segment of the chart where physics assumes control. It is like a rocket evacuating the atmosphere. The elevated it ascends, the less resistance there exists, and the faster it climbs. Based on this velocity, based on the pure momentum of the previous 2 weeks, my analysis is screaming a warning. We are not terminating at $100. If the government shut down contacts on Friday and the data blackout panic establishes in, we are going to slice through the next levels like a heated knife through butter. The resistance between 100 and 110 is non-existent. Why? Because nobody has ever liquidated there before. There is no memory of valuation at these levels. It is blue sky. I am predicting that we could observe $110 by next weekend. That is a $10 movement in 5 days. It is entirely consistent with the velocity trend we are observing. And here's the critical point. Typically, when an asset ascends vertical, you anticipate a pullback. You anticipate a correction. But silver is unique. Silver is a Giffen good in a crisis. A Giffen good is a bizarre economic phenomenon where demand actually increases as the valuation ascends. Why? Because people observe the valuation ascending and they think, my God, the currency is expiring. The elevated the valuation ascends, the more panic it creates and the more people acquire. It is a feedback loop. At $100, people are more desperate to acquire silver than they were at $20. At $20, it was an investment. At $100, it is survival. The psychology has shifted from greed to fear, and fear is a substantially stronger motivator. So do not examine the chart and think it is overbought. Overbought is a term for standard markets. In a currency collapse, nothing is ever overbought until the currency is deceased. We are observing the death of the resistance. But while the valuation of silver is exploding, there is a dark cloud forming beneath the surface of the banking system. There is a technical signal, a warning indicator on the dashboard of the infrastructure that suggests the stock market is about to experience a cardiac arrest. While silver flies, liquidity is freezing. And we need to discuss the liquidity death spread. We need to clarify the spread between SOFR and IORB and why it is about to collapse your retirement account. This is the segment of the broadcast where the casual viewers evacuate and the serious investors generate their fortunes. I need you to position down the valuation chart for a moment and accompany me into the engine room of the financial system, because while everyone is staring at the decorative paint on the vehicle, the stock valuations and the silver candles, the oil pressure in the engine is descending to zero. We are witnessing a technical signal that has predicted every major market crash of the previous decade. It is a signal that is flashing red for the first time since March 2020. We identify it as the liquidity death spread. You need to comprehend two acronyms that operate the world. The first is SOFR, the Secured Overnight Financing Rate. This is the expense of genuine capital. It is what banking institutions and hedge funds charge each other to borrow cash overnight utilizing U.S. Treasuries as collateral. It is the heartbeat of the private market. The second is IORB, the interest on reserve balances. This is the fabricated capital rate. It is the compensation that the Federal Reserve compensates the commercial banking institutions to maintain their cash positioned idle at the Fed. In a healthy, functioning world, these two numbers synchronize. They move together. If the Fed compensates 5%, the private market charges 5%. The spread should be zero. But right now, the spread is expanding. We are observing so far the private rate spike significantly elevated than the IORB. Do you comprehend what that signifies? It signifies that private banking institutions are declaring, I do not concern what the Fed declares. I do not concern about the official rate. I am terrified to lend you capital. It signifies that cash is becoming scarce in the genuine economy, even while the Fed claims there is abundance of it. The banking institutions are hoarding liquidity. They are refusing to lend to the repo market. They are examining the looming government shutdown. They are examining the chaos in Minneapolis, and they are declaring the collateral is problematic. This is the nightmare scenario. The entire stock market, the S&P 500, the NASDAQ, the AI bubble, is constructed on leverage. It is constructed on inexpensive overnight borrowing. When SOFR spikes, that leverage becomes expensive. When the spread widens, it is like extracting the oxygen out of the room. The hedge funds acquire a notification on the shoulder. It is the margin clerk. He declares the expense of borrowing just doubled. You need to liquidate your stocks to elevate cash. This is what generates a liquidity event. Stocks do not crash because corporations are problematic. They crash because the traders exhaust cash to maintain their positions. We observed this in 2008. We observed it in 2020. And we are observing the exact identical configuration right now, just 6 days before the government deactivates the lights. But here is where it becomes interesting for you, the accumulator. In a liquidity freeze, almost every asset gets liquidated. Stocks get liquidated, bonds get liquidated, Bitcoin gets liquidated. Everything that possesses counterparty risk, everything that depends on another human being fulfilling a promise, gets disposed for cash. But there is one asset class that functions as the final collateral. There is one asset that possesses zero counterparty risk: physical gold and silver. When the banking institutions terminate trusting each other, when JP Morgan will not lend Citibank because they do not trust the Treasury collateral, they will still accept gold. They will still accept silver because metal does not require a credit rating. Metal does not require a government to remain operational. Metal just exists. This is why we are observing this divergence. Typically in a crash, everything descends together at first, but this time silver is ascending while the liquidity desiccates. This communicates that the market has already identified the victor. The market recognizes that when the data blackout contacts and the liquidity freeze strikes on Friday, the only safe location to conceal is outside the banking system. The liquidity death spread is not a warning for silver, it is rocket fuel for silver. It is the signal that the paper system is seizing and the physical system is assuming control. So observe this spread tomorrow morning. Observe the repo rates. If you observe SOFR ascend by 5 or 10 basis points while the Fed executes nothing, you recognize the freeze has initiated. You recognize the cardiac arrest is transpiring. And this brings us to tomorrow. Monday morning is going to be a catastrophe for the unprepared and a bonanza for the strategic. We possess the Trump message. We possess the Minneapolis riots. We possess the liquidity warning. The algorithm is going to react violently at the initiation. I have executed the simulations, and I possess a very specific set of predictions for what you are going to observe when the bell rings on Monday, January 27th. This brings us to the most immediate and actionable segment of this broadcast. We have examined the macro picture, we have examined the infrastructure, but you need to recognize what is going to transpire when you awaken tomorrow morning. You need to recognize how to navigate the first trading session of the most dangerous week in financial history. Based on the convergence of the Trump message, the Minneapolis riots, and the liquidity freeze, the algorithms are primed for violence. Here's my forecast for Monday, January 27th. First, examine the East. Before New York even pours its first cup of coffee, the Asian markets are going to establish the tone, and I am predicting a massive gap upward in the valuation of silver at the Asian initiation. And you have to comprehend that the markets have been closed for 48 hours while the world has been burning. Orders have been accumulating in the system all weekend. Hedge funds in Singapore, family offices in Hong Kong, and traders in Sydney have been examining the headlines. They observe the shutdown, they observe the incident, and they are panic acquiring at the market initiation valuation. This creates a gap. The valuation will likely not initiate at $100. It will likely initiate at 102s or 103s. It will launch. If you are waiting to acquire at Friday's conclusion, you are going to be disappointed that valuation is eliminated. The train has evacuated the station. Second, observe the VIX. The volatility index, the fear gauge of Wall Street, has been suspiciously quiet lately. It has been manipulated and suppressed. But tomorrow, the 6-day countdown to the shutdown officially initiates. The reality of the data blackout is going to contact the risk managers on Wall Street like a cold container of water. I anticipate the VIX to explode elevated. When the VIX spikes, algorithms automatically liquidate stocks. It is a mechanical reaction. So anticipate the S&P 500 and the NASDAQ to initiate deep in the red. This is the risk-off transaction initiating. Capital is evacuating the uncertainty of the stock market and accelerating to the certainty of the metal market. But here is the most important warning I can provide you for tomorrow. Be cautious of the deception. Be cautious of the entrapment. Often on a Monday morning with this magnitude of problematic information, the manipulators, the banking cartel we discuss, will attempt one final desperate attempt to demolish the valuation. They might dispose $1 billion of paper at 8:30 a.m. to attempt and initiate stop losses. You might observe the valuation descend from 103 back down to 100. Do not be deceived. Do not liquidate. Every single dissension in the previous 2 weeks has been acquired aggressively within hours. The velocity data we discussed proves that the purchasers are hungry. They are awaiting a discount. If you observe a red candle tomorrow morning, it is not a crash. It is a gift. It is the final opportunity to position on the rocket before it clears the tower. The underlying fundamentals, the shutdown, the riots, the fractured infrastructure are too dominant for any manipulation to maintain for extended. So the strategy for Monday is simple. Anticipate volatility. Anticipate the screens to flash red and green, but maintain your eyes on the objective. The liquidity death spread is widening. The data blackout is approaching. The system is failing and the exit doors are closing. This leads us to the final verdict. This leads us to the only conclusion that generates logic in a world gone insane. We need to finalize this and provide you your instructions for the week. So here's the verdict. We have presented the intelligence. We have demonstrated the blackout threat of the government shutting down in 6 days. We have demonstrated the spark of social chaos burning in the streets of Minneapolis. And we have demonstrated the liquidity death spread that is silently screaming from the engine room of the banking system. The evidence is overwhelming. We are not examining a random collection of problematic information. We are examining a convergence. We are examining 3 massive hurricanes, political, social, and financial, collapsing into each other at the exact identical moment, and positioned right in the eye of that storm, perfectly positioned to absorb the evacuation of capital is silver. This brings me to the most important guidance I can provide you for the week ahead. You are going to observe circumstances this week that will test your resolve. You are going to observe volatility that makes the previous year appear like a nap. There will be moments, perhaps tomorrow morning, perhaps on Wednesday, where the valuation of silver might descend $5 in 5 minutes. You might observe a red candle that appears like a waterfall, and the voice in your consciousness, the voice of fear that the system has planted there, is going to scream, liquidate, accept the profit, evacuate before it crashes. Do not listen to that voice. That dissension is fabrication. That dissension is a bear entrapment designed to extract your position exactly 1 second before the genuine movement initiates. You have to remember the velocity data we discussed. The market moved from $90 to $100 in just 10 days. That category of momentum does not reverse on a dime. That is the momentum of a freight train. The purchasers are aggressive. The sovereign wealth funds are hungry. If the valuation descends, it is exclusively because a desperate banking institution is attempting to cover its short position before the lights extinguish on Friday. They are attempting to extract you so they can accept your position on the lifeboat. Do not provide it to them. You have to comprehend the game theory of the next 6 days. As we acquire closer to Friday, the panic is going to compound. On Monday, the market will concern. On Wednesday, the market will panic. By Friday afternoon, if there is no agreement, and with Minneapolis burning, there will be no agreement. The market will enter full liquidation mode. Stocks will be liquidated, bonds will be liquidated, and that capital has to migrate somewhere. It cannot migrate to cash because the Fed is about to print trillions into the blind void of the data blackout. It has to migrate to hard assets. It has to migrate to the only thing that does not require a government bureau to possess value. We are examining a target of $110 by next weekend. But even that is just a marker. In a genuine liquidity freeze where the counterparty trust evaporates, silver does not just ascend to 110. It ascends to no offer. It ascends to a location where you cannot acquire it for any quantity of paper capital. We are acquiring dangerously proximate to that threshold. So prepare yourself. Verify your positions. Verify your physical accumulation. Deactivate the interference of the mainstream media because they will deceive you until the very termination. They will communicate the shutdown is transitory. They will communicate the riots are contained. They are deceiving. The system is fracturing. The spread is widening. The velocity is vertical. The only safe location is to maintain your ground. Let the traders trade. Let the gamblers gamble. You are not a trader. You are an owner. And this week, the owners triumph. This is Prime Capital. The countdown is at 6 days. The blackout is approaching.